thank you everyone for joining here on this Twitter Spaces. Who else we got? We can bring up some other people. If anyone wants to speak or contribute or whatever, let us know. But we will be doing some Q&A as well. And I also will be making a video very, very soon on my channel to kind of go into depth about Commonwealth and all of its aspects. I think it's an incredibly unique project. The team's been working on this for almost a year and a half, and really, really amazing team as well. And this is, something that I really believe in, as it solves a real problem. The real problem is access, and in a real way, right? Where something, a lot of people asking, is there some similarity to paid and Commonwealth? And really there isn't, right? Where Ignition as a launch pad, and it's been in stealth mode, and I won't go into too much about it, but there's been massive, revamp and building in stealth over there. But essentially, all your kind of ideal launch pads, they work in a way where you there's some sort of tier system, and you are doing deal by deal kinds of investments, or participating in these token sales, and in exchange for one currency, you're getting the token of that project, and then you're managing that. Whereas Commonwealth is a protocol that will be completely decentralized, permissionless, open, truly a protocol. Like, you can think of it, even though it's going to be running on top of Ethereum or Ethereum layer 2, it's still a protocol. You can think of it similar to something like Bitcoin or Ethereum, or something like Colt Dao, where it's unstoppable, and it's just going to be a machine that operates, which is really exciting, right? Most launchpads are centralized companies operating the Web3 space, offering a service, and Commonwealth is really trying to replicate the traditional fund model. It's a lot of similarities to a traditional VC fund, where you've got similar structures: Fund 1, Fund 2, Fund 3. They can't have similar mandates running concurrently, but you can have concurrent funds running that have different mandates. So you could have, for instance, like a DeFi fund that looks for like new exciting DeFi primitives, and you could have a Metaverse fund, and then you could have an NFT fund, and they could all be running simultaneously, which is what happens at these big funds like Sequoia and A16Z, for example. For the funds, and let's say that you just have a DeFi fund, and let's say the first fund size is $1 million, it's non-recyclable, right? So what happens when that? So you've got all the participants who want to come and participate in this fund, this DeFi fund. It's going to have a very low barrier of entry, right? I don't know what that number is, but it's going to be very low. We're talking in probably less than $100, and this is exciting, right? Because if you want to go invest and put your money in a very professional fund, like A16Z or Pantera, or Sequoia, whatever, you're looking at like a $2 million minimum investment, and you're going to kiss that capital goodbye for 10 years. And whereas in Commonwealth, the second that you put your capital into the fund, you're liquid, because you get an NFT that represents your ownership in that fund, and that is immediately tradable in the secondary market, right? And let me be clear, these are different than the Genesis NFTs. These are the kind of just think of these NFTs as a receipt of your share of the fund. And I even imagine a world where, in a bull market, you might have people that are speculating that this fund is going to be great because Commonwealth has, the previous funds have done really, really well, and there's going to be a lot of demand. I can even imagine that, let's say, a $10 million fund opens one day, and people are just, buying up the allocation in the fund, and then immediately after that fund sells out, closes at $10 million, you might see, and I'm sure you'll see these NFTs trading on the secondary market of speculative value on what people think that perceive that to be, and people might FOMO. But let's say that Commonwealth has already deals lined up for the next Aptos and Sui and blah blah blah, whatever. It's the same thing that happens today on OTC markets. A lot of things that a lot of retail investors probably aren't aware of is that there is an OTC market for allocation for investments. I was on a due diligence call the other day with a project called Socrates, and all they do is sell the secondary allocations from VCs. So I was talking to them. They had massive resells of, Sui and Aptos and Scroll and blah blah blah. And but the cool thing about this is that everything from Commonwealth is on chain, verifiable, trustless. No intermediaries, all peer to peer. And so this is what Commonwealth is on a high level. It's there's a lot of really interesting things about it, and if you want to dive super deep into it, it gets really complex with an incredible token economic model. Literally, hands down, the best one I've ever seen by far. Right? I'm not even like, and I would encourage anybody, and I'm open to rescinding that statement if someone finds a better one. But I have yet to see a more interesting token economic model that really lives in the true ethos of a closed loop circular token economy, that all value created is redistributed into the ecosystem. That's incredible, right? Imagine that all of the profits that were created from A16Z or Sequoia or whatever, if instead of going to a few of the founders, got redistributed to all of the LPs of the fund, all the participants that helped, to help grow that fund as big as it got. So that's what we're looking at here. I actually want to go and retweet this. So I don't know if Tim, if you want to take over. I know you know this just as well as I do. So if you want to take over, I'll take a minute to go retweet this and see if we can get some more people over here.
Yeah, cool. Thanks a lot, Kyle. Welcome everybody as well to the Twitter Spaces. This is the first Twitter Spaces we're doing from the Commonwealth account. As everyone knows, Commonwealth was in stealth up until actually a month ago today. So it's only been sort of out of the closet for the last 4 weeks or so. Really exciting times. But I think, as many of you have pointed out in our Telegram channel, by the way, if you're not in our Telegram channel, I think it's worth popping over there. There's some really good insights, some good exchanges. It's a great way to sort of stay in touch with the project. Yeah, quite a bit of the feedback is, guys, we need to really kind of get the word out here. But the only thing I would say so far is, even with the small group on the Telegram channel, it's been phenomenal to feel that sense of validation from the people on that group, in that what we're doing isn't crazy. What we're doing actually is solving real problems out there. We know that the structural systems with regards to venture capital, investment landscape, financial well-being are very, very biased in one direction. And we believe we have the technology and the solutions to be able to change that. And we're not crazy, apparently, because I think a lot of you agree with this. And we're hell bent on making that happen and bringing that to market. So with that in mind, I'd like to bring in Tony, who's many of you have been introduced to through the various blog articles. If you've looked at the podcast that we did together when we were recently on a team building over in Thailand, Tony is the CTO and COO, so he's leading the project, and it's appropriate that he wears the two hats, because it is a technology project first and foremost. And Tony is a powerhouse when it comes to technology. He won't mind me saying this. I always say that what Tony has forgotten about technology, I'll never even be lucky enough to know. So he's been around for 30 years, been around 30 years in technology since the evolution of Web 2, and now he's all in on Web 3. And I'll let Tony give you an update on how we are progressing on the side of the technology, how the protocol is developing, how the app is developing, and just give you kind of an under the hood kind of update on what's going on there. So Tony, I'm going to invite you to speak, or if you can raise your hand, maybe that's the easiest way. Tony, if you're there, raise your hand.
Until Tony comes up, I'll just continue. Now that I made this retweet, so there's other aspects too, and I want to give a shout out to Colt Dao. You got to give respect where respect is due, and credit is due. With full transparency, when I first found out about Colt Dao, the first thing I did was send our token economic document, because we've been working on this, long before I even discovered Colt Dao. And so I sent it over to Mr. Modulus because I want to take a look at it. And so, but there is the entire Colt model literally implemented within. It's another aspect of Commonwealth, because I think it's a really cool thing to be able to get the DAO involved as well, and be able to have, while you have the traditional fund side happening on one side of the spectrum, you have the crypto native community who can participate in their own kind of governance system, their own kind of deal flow choosing, and their own voting for deals that Commonwealth wants to invest to on behalf of the community. Whereas the traditional structure of Commonwealth, which is the evolution, significant evolution from what Colt did, is being able to service people who don't really care about the DAO, the non-crypto natives, if you will. We're going to make this app will be easy enough that someone can come in with a credit card and invest into one of these funds, and if they don't care about the wealth token, that's okay. It's all inclusive. We want to invite everybody, and in fact, that creates value, right? So someone comes and brings in a $10,000 check in the form of a credit card investment, or they want to send stablecoin, whatever. That does a 10x. It turns into $100,000 in value. Well, now we've created that value. That value's been created by Commonwealth. The standard carry or success fee that's charged on that, or the reward, the kind of protocol fee, is 50%. And that could, of course, can be reduced with staking of wealth tokens. But if someone doesn't want to do that, that would, in this case, that would be $50,000 worth of value that was created from this person who just didn't want to participate in the DAO, didn't care, and we are okay with that, right? I think that's one thing that the crypto world is neglecting right now, is how do you service the non-crypto community? And we shouldn't be exclusive to people who care about Web3 enthusiasts. We should really be focusing on how do we appeal to the mainstream and give them a product that they can use. And in this case, it gives them early access exposure to the best deals in the crypto space, and the DAO gets to reap the benefits of providing that service to somebody, and that's extra value created that is being enjoyed by the community. There's more too, but if Tony is Tony up here? Okay, so Tony's still not up here. Okay, well, I'll just keep talking then. And if anyone has any questions in the meantime, yep. My Binance. I'll just answer some questions right now if anyone has any. While we wait for Tony to come up. So, my Binance, just connecting whenever you're ready to speak. Go ahead and ask a question. Not sure what's taking so long, but let's see. Okay, what else could I talk about?
Kyle, at the moment, Twitter's just having some major issues. It's people can't log in. I think that's the problem. I think Tony's struggling from his end to get in. Anyways, guys, I'm one of the co-founders of Metaverse Capital. As Kyle said, we've been building this project for the last 18 months. Really excited to be here. We've kind of had to keep everything quite quiet as we've been building in stealth. But yeah, it's great to finally be doing our first official Twitter Spaces, and yeah, happy to answer any questions everyone's got.
Tony, you can unmute yourself and introduce yourself as well.
Yeah, hi everyone. My name's Tony. I'm delighted to be here on the first Spaces with you all, and I'm happy to share kind of what we're up to. Do you want me to continue, Colin?
Yeah,
or
sure.
should I...
If you could just introduce, give folks a bit of your background, if you will, and then
Sure.
you can maybe just give a bit of an update on, maybe from the tech side, how things are going.
Absolutely. Well, as the guy said, I started my tech career back with Intel back in 1996, where I was working for an e-learning group, building early e-learning applications. And quickly ended up moving into the gaming side and the infrastructure side of things. And after a couple of years there, we'd won a few awards from the United Nations, and had kind of done quite a lot on the innovative side of e-learning in terms of pushing forward the boundaries at the time. But I was kind of caught by the gaming bug, and ended up working in a number of different companies in Ireland on gaming related projects, including some very early multiplayer games back on dial-up modems. That's how early we were. And then, long story short, I guess I ended up joining Demonware just before they were acquired by Activision Blizzard. This will be back in, I guess, about 2007. And that was just before Modern Warfare came out and kind of broke all internet records. And that was the next 10 years of my life, basically, was keeping the infrastructure up and running for 600 million rabid gamers. I've been in and out of Web3 since 2015, maybe early 2016. It was the first time we deployed a smart contract on mainnet. And kind of, as I said, kind of mostly stayed in Web2 and gaming and startups and investment for the last couple of years. And then a couple of years ago, did some consultancy on an NFT marketplace and then a gaming project. And ended up meeting Kyle and Tim and John and some of the guys, and getting pulled in very quickly into Commonwealth. And that's been my life for the last 14, 15 months, I guess. So I'll that do as an introduction then before I head off into giving you guys an update. Is that good enough?
Yeah, that's great. That's great.
Yeah, sounds good.
Yeah, why don't you go ahead and give us an update on the tech? I think that's really relevant. One of the things, I'll just start off by saying that one of the things that we wanted to make sure that we did before coming out of stealth mode was have a product that was well on its way to being being able to be shipped. We didn't want to come out and then still be 18 months away from being able to actually provide something that you guys could use. And I think from Tony will go into more depth, but I believe that we're kind of trying to gear up here for the next few months or so, the beta, and of course, and then you have a huge amount of testing that will ensue after that, which will invite a lot of you guys to come try out the beta. But that's my high level, and Tony will get into the tech stuff now.
Sure. Well, I'll start with what's most immediate, I guess. So the good news is this morning we passed the Series 1 upgrade script, passed testing. So that's now ready to be deployed and will be deployed tomorrow. We'd hoped to get it out this week, and it looks like we'll be able to do that. So kind of from some point tomorrow, the Series 1 holders will be able to migrate their NFTs and receive the full utility then from the upgraded Series 1. Likewise, then we're also on track to commence staking the Genesis NFTs from some point next week, at which point you'll be able to earn daily rewards. And then also the team is putting the finishing touches to the sale contracts for the Series 2 sale, which was imminent, as you guys know. As we're a small team, these kind of fundraising driven activities obviously take a big bite over time. So in the background, we've been working away trying to keep the platform delivery on schedule. And we passed a pretty big milestone last week. We got a fairly significant part of the automation and the back end in place. The interface, if you like, between the Web 2 piece of the platform and the Web 3 part of the platform. So it's great to see that that's still moving forward in the background, even while we have to divert the team to kind of more pressing matters. In general, kind of high level, we're obviously going to start talking a lot more about the product over the coming months. So I think for now, I'll give you guys a high level update of the progress we've made since we started development. And really, we did spend a significant chunk of the first part of the year, as Kyle mentioned, kind of really pulling apart the tokenomics and kind of conceptualizing a lot of the issues that we believe need to be solved if we're to scale our vision for Commonwealth, and to onboard the kind of users that are going to be coming into Web3 and that are very much part of the audience we want to serve over the next kind of 3 to 5 years. So, we are tackling quite a lot of difficult problems that either haven't been dealt with very well in the past in Web3 or haven't been tackled at all. So we know we've got a big uphill battle ahead of us. So I guess it was September, October last year, we started into design and prototyping properly. And really proper development only started, I would say, in December. But we are fully within the kind of plan we had, which was to deliver, to be fairly far along the journey before we revealed what we were doing to you guys and start gathering feedback. We wanted something of substance to show you. So As of today, we've completed the core workflow for investment is done, authentication is done, the app shell is done, mobile and desktop UI, or I'd say about 90% complete. We've a significant part of community in place. As I mentioned, backend and analytics are in place. The fiat on ramp is in place. So the bigger jobs, I guess, we have to tackle over the coming weeks and months are, figuring out the notification system and how we want that to work. We still have to design and review some of the tokenomics related to rewards and our plans there. And of course, then we have to implement the design we've built for the treasury management piece. Still very much work in progress, but we're also planning on doing something a little bit different there and trying to make the insight into the community treasury and the protocol even more transparent and usable than perhaps people will be used to in Web3. So very ambitious. And I'm sure there'll be a million questions later on, but I'm happy to take them. And as I said, we'll be sharing a lot more over the coming weeks and months, both with relation to product and the architecture, etc., etc. Thanks, Kyle.
Thanks, Tony.
Tony, just one question
Yes.
that the audience and holders might be quite interested to hear. When we migrate from this NFT contract that we were originally on to the new one, will the NFTs continue to be on sale on OpenC, or are either one of them going to be stopped?
Oh, good point. Yeah, the way OpenC works, unfortunately, is every NFT has to be a separate collection. So in the test we actually ran this morning, what happened was as the user connects their wallet, the application detects how many NFTs of the Series 1 you have and automatically assumes you want to update all of them. And once you approve that transaction, it deletes the original NFT from the collection, the original Series 1. So you'll see them disappearing off OpenSea as they're no longer tradable or even existing in that case. And you'll see the new NFT appear in new collections, one for Series 1. And then later, when we do the Series 2 minting, that will also be then in a separate collection. And that's a constraint through OpenSea. So to answer your question, John, yeah, the original NFT will stop being tradable, and only the new NFTs will then be tradable from that moment on.
Yeah, cool. If I could just say, everyone out there, just be very careful for the first day or so. These guys create fake collections.
Yeah.
And, look out for the one that's got some volume. I'm sure, after the first 6 hours or so, there'll be 5 ETH volume plus, and just trade that collection and watch out for these scammers that create these fake collections.
Yeah, the trading is a little bit difficult. It opens itself up to lots of abuse, as we know. So we've already had some false accounts and false collections. But what we can do to help mitigate that, I'm sure we can release the addresses for the 2 official collections. We already have them reserved on OpenSea.
Nice. Yeah. Cypherpunk, you want to come up and ask a question or have anything to say?
Yeah, so I've got a couple of questions actually. So when you were talking about the app a bit earlier, the first thing I thought about was like, it sounded like the Robinhood app we kind of all know, but then on steroids. Is that something that was an inspiration for it? Since like Robinhood gave access to a lot of people into stock markets that usually wouldn't have access?
Yeah, we do discuss Robinhood quite a bit, when we're talking about the development of the app, and one of the things that I say a lot is that it wasn't illegal or anything for retail to buy stocks. It just was very difficult for them to do it. Most people had no idea how to do it, and Robinhood was brilliant in the way that it just made it super simple for people to get involved, and that's really what Commonwealth is doing as well, is making it easy for people who want exposure to the crypto market, but don't really trust their own judgments on the open market, and not only the open market too, but it's we all there's some degree of vetting. Now, of course, we always encourage everyone to do their own research, and everyone should do their own research, but there will be a council, and the way that deals get presented to the individual funds is through the council. They're the only ones who can present deals to this. And what I'm talking about now is the legacy side of the app, where the traditional fund structures, not the community fund, but the traditional. And so this is from the council members, and we are we have some people who are interested in becoming council members already. Myself will be one of them, but we're looking for other people with good experience and have a successful track record of investments, know their stuff, and we think that they will be interested because as a VC, you invest into projects and they're always asking what other VCs should we be talking to, and most VCs are quite similar. Most of them, a lot of them don't add too much value. The bigger ones, maybe their brand adds some value, but Commonwealth is going to be a massive, live, vibrant community of enthusiasts and people that get really excited about this opportunity. And the community itself from Commonwealth is going to be full of alpha and family, and we call it All Street, right? Knock that W off the Wall Street and open it up, all inclusive to All Street. It also plays on the whole 99%, the Wall Street bets, and the Occupy movements, and that's really what our MO is. It's about being all inclusive and lowering that barrier of entry, and that's also why we decided to change up the Genesis 2 NFT. Originally we were thinking about minting an additional 1,500, I believe, to the Gen 1, but we realized that it's already at a price right now where people are priced out, and that's not who we are as Commonwealth. We're really trying to allow access to people who $500, or I think today's price is $1,000 for that NFT, is just way too much. And so the Gen 2 NFTs will be rolling out in over 10 weeks. Each mint will be 999 NFTs. Each of them will be $99, and this is a better access point. We really want to make this something that is attainable for even the people who don't, the shrimps, right? Not the whales, but the shrimps. And of course, whales can participate too, and we expect them to. But yeah, to answer your question, this is very similar in a way, but I think you put it quite well, on steroids, of Robinhood. We know that the Robinhood founders, got incredibly rich. It went public. Now they're both billionaires, and if that value is redistributed to the token economy, well, now you have one aspect of Commonwealth, but there's so much more to it.
I think another point, just to go on, is this council is very valuable, because in a bull market, when you've got 30 VCs going after one spot, sometimes you get like a seed round and there's only $1 million available, and they've only got space for 5 VCs at 200K each. They kind of do like an interview process, and they say, like, what value can your VC bring to our projects, and why would we want to give you a ticket? I think Commonwealth covers basically every aspect of what a project wants and needs on their cap table. And if you've got 15 or 20 very valuable and experienced council members, they're going to be seeing deals from very early stages, and I think that's the additional value that these council members are going to bring.
Cool. Thank you for the very good answer, actually. So another question I had, and this one is probably more for Tony. I already asked it, but it was a bit awkward since it was in Telegram and maybe not too much time, or maybe it's still being worked on. One of the questions I was wondering was, what I often see with DAOs is, like, you've got this small group of whales, and you even see it in big DAOs, which is just like a small group of whales that determine the entire direction of the project, just because of their capital. Now, this is something, when I think of Commonwealth, this is something Commonwealth wants to represent the opposite of that. I was wondering if there was like a safety measure, or, well, Tony already told me there is a safety measure to make sure that doesn't happen, and everyone's vote contributes. But I was wondering if you all can already tell me something about that, or is it still a bit too early?
It's very early, so we're very aware of the problem. So we've decided to kind of tackle it in a number of different ways. So firstly, the funds governance is quite different than, say, the platform and protocol governance. So the fund governance, we believe, does need to be a one-to-one, one token, one vote. Not so much tokens, but proportionate to your investment. Because people who invest the most into a given fund or are bullish about a project, well, their vote should be counted. For the platform and protocol, though, I think this is still in active discussion with the team. Right, we're still thrashing through many of these kind of governance type issues and some of the structures we want to put in place. So it's very much an evolving conversation. But some of us have made that same point from day one: is that we don't want to have a small majority of whales in a community sway the entire community. It must be something that's representative of the Commonwealth ideals and the community as a whole. So we're still figuring out exactly, which voting mechanism we'll use there, and kind of how even those various structures within Commonwealth will be structured and organised. But it's something that's under active discussion and something we're very, very aware of. Even just doing the due diligence on the voting piece, right? There's like 350 plus different voting mechanisms being used by different DAOs currently. And one of the things that's been fundamental to what we've tried to do with Commonwealth is we want to increase the participation of the community in the DAO and in running the protocol, because on the whole, online communities are very vocal about having a say and ownership, but then don't exercise those rights or responsibilities. So there's two aspects, and we're going to talk about this in a forthcoming blog post, but there's a couple of issues with communities we're trying to solve. One of which is just participation, and two, increasing the signal to noise ratio within those communities, within those channels. Because, what people like the SEC don't tell you is that the two approaches to dealing with these, investor protection, one is regulation and enforcement, but the other one is education. We've never seen anyone really tackle the education and inclusiveness aspect of things. And that's what we're trying to do also with Commonwealth. So from the learn aspects of what we're doing in that education piece to educating people about how to do due diligence, how to scale that due diligence as a community and provide better value. They're really fundamental to what we're doing, and making sure that the views of the community are well represented and fairly represented, I think, will be key to making it a success. But I won't pretend we have all the answers yet. We don't. We've got more questions than answers, and we'd very much welcome your input, I don't know if Tim or Kyle or any of the other guys have a perspective on that they'd want to share, but that's my take on it for now anyway.
No, I think you covered it, Tony. Is there any other questions, or we've got a couple of topics we wanted to sort of cover off? But
go for it, bud.
Thank you, Kyle. Hey guys, this is Nish from Crypto Sahib. My question could be either to Tim or Tony. You earlier we talked about Commonwealth ideals, and since this is the first Twitter space, I wanted to understand what inspired you to create this token, this project. That's my first question. I will let you answer that. I have a second one, which is more around the due diligence process that we will be taking place throughout the life cycle, and how would we look at evaluating projects and companies that we could pick and choose. So you could go ahead with the answers. Thank you.
I can take the first one, and Tony, you take the second one, if that's cool. Thanks for the question. I think it's great. So I'm part of Metaverse Capital, and it was Metaverse and Master Ventures that sort of gave birth to the idea of Commonwealth. And I think we shared a common problem. We fundamentally believe that the systems and the architecture around VC investment as a legacy from Web 2 and Silicon Valley wasn't really in tune with the principles of decentralization and Web 3. So in essence, we were operating with a system that we'd inherited, but wasn't really fit for purpose if you think about what we're trying to achieve with Web3 in terms of decentralization, empowerment, increasing autonomy and ownership of data and finances, essentially. And we felt we can do better. That was one problem we really thought we could solve with Commonwealth. Use the technology in the environment where the technology is actually kind of being being at the forefront. So essentially, through Commonwealth, we're aiming to break down the barriers that are existing from Web 2 with Web 3. I think that's one really important problem we wanted to solve. The other thing was, I mean, it became quite apparent to us in just sitting in our sort of VC chairs, for want of a better word. There is, a huge amount of privilege attached to what happens when you come to a VC. You're accredited somehow, and you get access to these wonderful opportunities that can do very big multiples. Of course, there's high risk. There's a lot of deals that don't eventualize into being successful. But whenever there is a really successful one, often the big issue is that the retail investor or the community in Web3 are the last ones to know about it and the last ones to benefit from it. And we felt that privilege, was not necessarily a good thing. And we aim to sort of tackle that problem with Commonwealth. So an ideological one, but also a principled one. They're slightly nuanced, slightly different. The last thing, which is just a unique feature that we really wanted to solve with Commonwealth, was liquidity problems when you become an investor. We all know that if you lock yourself into an investment, at early stages, it can take you sort of 5 years, 6 years, 7 years. Some funds are like 8 years in terms of the lifespan. That's a real difficult situation to tackle if all of your liquidity is tied up in investments and you're locked in for that period of time. So one of the features of Commonwealth, which Kyle explained at the top of the call, really to be able to allow people to become liquid at any time of their choice and any amount of their investment. And that for us solves a big issue as VCs that we face, which is that through hell or high water, we are locked into these investments for a very, very long time. Whereas if you use Commonwealth, even as a VC, imagine, we as Metaverse Capital started to use Commonwealth as our main vehicle for investing, then we would, essentially be able to de-risk. If our investments are doing well, we can break them down into, smaller pieces and sell them as NFTs on the secondary market, like Kyle mentioned earlier. So that's another problem we were inspired to solve with Commonwealth. So some very sort of practical problems, but other ones that are very sort of principled. I hope that covers the question. I'll hand over to Tony.
Thank you.
Thanks, Tim. You've hit upon one of the most interesting pieces of the platform from my own point of view, which is, how do we structure and scale due diligence? And it's a piece we haven't fully thought through yet, and that's kind of partially deliberate, to be honest, because one, how kind of due diligence is done varies from person to person. It's very subjective. Like, don't believe these frameworks that are put out by VCs about their scorecards and things like this. I've been in the space 30 years, and investors always invest emotionally. They invest because they made a connection with the founders, or they believe in the vision. They might, obviously they believe there's a commercial opportunity there as well. But so often it ends up being these quite subjective criteria that are used to evaluate various investment propositions. And I spend a lot of my time working either part of the M&A committee in mergers and acquisitions committee in Activision Blizzard, and evaluating a lot of these companies from our own perspective and our own strategic objectives. And then you look at Web3, where it's a very different set of criteria that's often used both economically and from a due diligence point of view. And personally, I haven't been terribly impressed with the level of due diligence in projects I've been involved in Web3. There's almost none. One project I was involved in raised $6.5 million in 5 weeks. Not a single investor ever spoke to the CTO or did due diligence on the technology or the tokenomics. They're facts. So that horrified me when I came into the space. So when I met the Metaverse guys and Kyle from Master Ventures, I got the ambition and I got the vision, but I also got here's a group of people who are trying to, bring some honesty to the space and some structure and some diligence, and that really aligned with my vision as well, because that's something we can educate people about, and we can help them feed back into the systems and processes we're building and trying to standardize on, and improve them further for everyone's benefit. So it's an evolving conversation. It's a piece that we will be talking a lot about kind of in the future, not at this point. We do have a kind of a communications plan, if you like, in terms of how we're going to reveal some of the detail. There will be a lot more to come. But I can tell you we're spending quite a lot of time abstracting a lot of what we're doing and trying to figure out how do we make this a standard? How can we put this into smart contracts that are auditable, that are standard terms? And part of that would be an evolving conversation, I think, with the projects over time, and with the council for sure. I'd value if John or Kyle had any perspectives on this they'd like to share as well, given they spend a lot of their lives thinking about these same issues,
Yeah, sure. I'll jump in real quick, finish that question. We have another question from Crypto Sponge, but after I answer this, just give Tim a second to announce something. And but yeah, from a due diligence perspective, it really comes down to a couple of things. One is a council, they should have essentially vetted the projects that they're going to pass to the funds. More than likely, we would expect that they have already personally written a check into these projects. The council will comprise of investors, that have track records, funds or angels or whatever. And so they should have already put their money where their mouth is. I guess there's rare instances where maybe it's one of the partners of a fund. Maybe he says, hey, the fund passed for some reason, but I still love this project, so therefore I want to propose it. But they would have already done due diligence, and we will hold them accountable too. So we will build in a way to kind of also assess the quality of deal flow and how many deals the council are presenting. And like all things in a DAO, the council can be removed by the community if they feel that they're not doing a good job or providing value. So that's one. Now, of course, the other way that due diligence would be done, the council can only propose deals. They have no voting power on whether these are passed or not. Only the LPs in the fund, which is considering investment, have the ability to vote yes or no on a proposal to actually invest into that project. And so this is when there will be certain gated communities set up for the LPs of the funds, each individual fund, where they can go internally into those groups and discuss and share with each other and try to poke holes in the model, whatever. And if there's consensus, then the fund partners can go and vote on the proposal, and it gets passed through. So that's a bit of the due diligence process. We do expect the community to be super, super active and engaged. And so, yeah, I hope that answers the question. Dad 3 Young, you're next, but just before, Tim, if you want to come on stage.
Thanks, Carl. So it's not so much an announcement, but it's doing justice to this. A lot of the questions that have come up already in the Telegram chat over the last couple of weeks, specific to the marketing. I think everyone knows that Commonwealth is still like a very well kept secret. We've been in stealth up until 4 weeks ago. I mentioned that earlier. Everyone knows that. What's really important is now that the community is spread far and wide. And in order to do that, we need a big, big audience so that the message gets out. I think that's, fairly obvious statement to make. But I just wanted to give a small kind of piece of insight as to the strategy that Commonwealth is employing in order to get that audience and to get the messages out. Kyle talked about All Street. Very much what we're doing in terms of marketing and exposure is All Street marketing. And it's really about getting the community to market itself. And what do we mean by that? We're talking about aligning with people who have an influence and have an audience in Web3, and seeing if there's a good value match and a good fit for Commonwealth, and also for them, how they perceive Web3. Not everybody's in it for the same reasons, but if you are in it for the same reasons as Commonwealth and you want to see the same reality that Commonwealth wants to achieve, then there's a very good chance that we can work together in terms of getting the word out. So we are in touch with over 100, let's say, people who would have influence in Web3. good Twitter profiles, really strong YouTube content. And we're working with them to start spreading the word for Commonwealth. Now, obviously, this takes a little bit of time to do well and to do properly. We're not taking shortcuts. We really want to develop and cultivate these partnerships and these relationships. But it is starting to happen. I assure you of that. And I will commit to some announcements that will be made soon. I can't give you an exact timeline, but pretty soon, of partnerships that I hope you'll really enjoy, and that you'll recognize when I tell you that Commonwealth is all about community, and these people are what we would consider at Commonwealth as being let's say advocates and guardians of the same kind of value proposition that Commonwealth looks to bring. So if you feel they're representative of the values of Commonwealth, also please be proactive and tag them on our socials, on our Twitter, and we will look into developing a relationship with them. If you are somebody who has an audience and you're in this chat, please reach out, DM us, and let's see if we can work together to get the message out. All street marketing is the only way that's really going to get us the long-term traction and the loyal community that we need for Commonwealth to be a huge success. So I'll stop there, but I'm just giving you some insights as to how we're approaching the marketing and to assure you that it is happening.
Thanks, Tim. Crypto Sponge, go for it.
Hey, sorry, that was my tagline, not my handle. I didn't catch it right away.
Oh,
hey, Kyle,
all good.
great to be here. Hey to all the team. Special shout out to Ian there from Boat Avenue Meetups. Good to see this finally come out. I was very excited to see this. My question specifically right now is on your NFT. Beautiful idea. I was one of the first people in Genesis Shards who was doing a similar NFT wrapping IDO allocations. So I love the idea. I think it's long overdue. Are you going to be able to do two things? Sell this NFT after TGE? And will you ever be able to fractionalize it if you have a large allocation and would like to still hold piece of it, but sell a piece of it?
Are you talking about the Genesis NFTs or the investment?
The investment NFTs.
Okay, so one thing that we need to make sure that everyone understands is that that's a fund structure, and it'll be treated like a fund, meaning that the individual investors in each of the funds will not be managing their tokens themselves. They don't get the tokens from these. You put stable coin in, get stable coin out. Very traditional fund structure, where it's all autonomous the way that this stuff is working. So but the second part of your question is, and I hope does that make sense?
I'm a little confused, but I think, it's another simplification of the process, which is probably beautiful. So I'll let you continue. Thank you.
Yeah. One of the things that I noticed was that, the more you automate things and make them part of protocol as a standard, the less drama it brings within a DAO. I've seen a lot of drama happen within Colt Dao, for example, and other DAOs I've been part of, and that typically seems to happen when there's a lot of subjective opinions on how things should be dealt with. And like one of the things that that I think that Colt does really well is that when it receives investment tokens back from the investments it makes, it automatically sells those for Colt tokens and then redistributes them and burns half of them, right? Now that we've had a lot of discussions internally about do we follow the same kind of ideology, and I just have to say that I think it's the best one, because you're going to have everybody all across the board when it comes down to receiving tokens from an investment and trying to decide when is the best time to sell these. And some people are going to be happy with a 2x or a 3x that it does, and some people are going to think that it's a moon bag and that you should hold it. But essentially, these things are vested over long periods of time, typically anyway. And so, on a really high quality investment, you typically have 2 or 3 year vest, even after let's say a 12-month cliff. And so even if you systematically sold these tokens over a period of time, you're still going to hit, more than likely, you're going to sell some of them in a bull market and some of them in a bear market. But we need to remove a lot of the bias and a lot of the confusion and arguments that would happen over the selling of them. So So it is a managed fund that's managed by the rules of the protocol and the constitution versus like a central authority who's managing this kind of stuff. The fund structures work in a way where the investments are non-recyclable, meaning that if it's $1 million fund, once the $1 million is deployed into projects, and the tokens come back, the investments come back, those will not be managed again and redeployed into new investments. Those will be converted into stablecoin and immediately start to be repaid to the LPs in the fund. And once the LPs have been made whole, so if you invested $1,000 into the fund, as soon as your $1,000 is paid back, only then does the protocol, the Commonwealth fee that kicks in, which is in a traditional fund, you'd call it carried interest or success fee or whatever. That would kick in, once you start generating profit, essentially. So that's the standard side. And then on the DAO side, of course, this is different, but it's still managed. So that's where it's very, very different than an IDO platform. You're never managing the tokens yourself. It's an autonomous protocol where all the rules are written in code and automated.
All right. Well, that sounds extremely interesting. I'm not sure I was completely clear on the fact. Does the launch of the token, the TGE of the token, have any bearing on your ability to exit your liquidity position?
Okay. You're talking about the Commonwealth token?
No, not the being in this pool. I invested $1,000, and I think I understand how you are converting it to stables and managing it.
Yeah. So okay, I understand the question. Yeah. So from the second that you invest into a fund and you get your receipt, which is an NFT, that represents your share. Let's say it's $100 fund and you put in $10. Like, you will get an NFT that says that you own 10% of this fund. And you can sell that immediately on the secondary market, right? You can exit your whole position, or as you asked, you can fractionalize it and sell a portion of your position in the fund. And that might be interesting. Let's say that the fund got allocation in all the best projects, Sui and Aptos and blah, blah, blah. And everyone just foaming at the mouth to get into these things. Your original $10 investment could be perceived in the market as worth a 10x right now, right? It could be at $100. You can maybe resell your position in the fund for, but maybe you don't want to exit your entire position. Maybe you just want to exit 25% of it, recoup your initial, and ride house money after that, right? And you can do that with this fund structure. Does that answer your question?
That is the first part of my question. I guess then, okay, maybe I didn't completely understand, because it's a group of assets, so it doesn't tie to any one of the assets' particular launch.
That's right.
Okay. And it's liquid for the life of it, I'm assuming.
That's right. Yeah.
Okay.
Yeah, and John, I'll let you take over, guys. I have to jump out. I got to go to the call, but thank you everyone who came in. Really appreciate it and look forward to the next one. But please keep rocking on, guys. Ask your questions. The rest of the team is super capable and competent. So I'll talk to you guys all later. Thank you.
Yeah, cheers, Carl. Yeah,
thanks, Carl. John, can I take over the moderation quickly, and then I'll invite you in?
Yeah, sure.
I just wanted to announce quickly that I know there's a competition running as well. A lot of you probably are very keen to hear about the results of that. During this Twitter Spaces, we have been keeping an eye on everything here. And with regards to the competition, 5 of you will get a DM from us pretty soon to get your NFT, which is a Series 2 Genesis NFT. So congratulations if you do get that DM. Also, if there's any questions that we don't tackle here, pop on over to the Telegram group and just pop the questions in there. We will do our best to get them, and we're going to run regular Twitter Spaces as well. So don't feel like if you didn't get your question in now, you won't be able to get it in. You'll have many of these AMAs coming up in the next couple of days and weeks and months. John, please come in.
Yeah, just on that topic, sorry, I didn't catch his name, but it was a very good question that he asked. I just want to go to Tony and ask him, will we be able to see a live valuation of each fund, which will indicate kind of how much the NFT is worth in each fund? So if you put in $100 and 8 months later the fund is, let's just say, for example, done an 8x, will you be able to see that live on the platform?
Yes, you will, both at the project level and the fund level and the protocol level. And the plan is to
Yeah,
have
cool.
that insight reporting be as close to real time as possible.
Yeah, so I think that also gives just a slightly better answer to that gentleman that just asked that question.
One thing I might add, just in case the gentleman was asking about, because he mentioned allocation in there, and I wasn't clear if he was referring to the fund based on his investment, or if he meant the wealth token allocation that's associated with the Genesis NFTs. Just wondered if you could clarify that. They're unrelated, but I just wanted to make sure we covered his query fully.
As far as I can see, I think he's gone off stage, so I don't think we're going to be able to clarify his question fully.
Okay. No worries.
Cool.
Tony, do you want to anyway give a quick, a very quick response as if it were, because maybe other people have the same question?
Actually,
just a really quick one.
Yeah, good idea. Yeah, so the Genesis NFT is a fundraising vehicle only, so it's got nothing to do with the day-to-day operation of the funds. The way the Genesis NFT will work is you're giving a share of revenue, which as long as you hold that NFT, you're entitled to draw down that share of revenue. But also there's an associated wealth token allocation at TGE for those NFTs. So once those tokens have actually vested, you're then free to sell those tokens, stake them, do whatever you want with them. Once they're vested, those tokens are no longer associated with the Genesis NFT. So if you were then to sell your Genesis NFT on the secondary market, only, it would still be entitled to the revenue share, but the NFT has a lower allocation of wealth tokens. So we'll also be providing a page on the website or through the application where anyone can go in who's curious about potentially purchasing a Genesis NFT on the secondary market, put in the ID number and find out exactly how many tokens are still left associated with that NFT. So unrelated to the fund NFT, and I hope that clarifies the various operations.
Thanks, Tony. For those of you still here, there is a bit of an announcement to come. So maybe John wants to talk about the Genesis NFT Series 2 very briefly. I know we've run out of time. Anybody who's not able to say, that's fine. We will send out the announcement as well on Twitter after this Spaces is finished. But John, do you want to give the news?
Yeah, I don't know the exact date that we're launching it, but I'm sure that'll be announced in due time. But we're doing 8,991 NFTs over a 9-day period. It's going to be $99 per NFT. A lot of those will be whitelisted, and there will be some giveaways as well. The utility will be very similar to the Gen 1s. You will be able to stake them as well. They won't be exactly the same as the Gen 1s, but they'll be very similar. Tim,
Well, can you give it? Yeah.
Are you going to give a date when it's launching?
Yeah, we're going to launch it on the 22nd of May. So look out for the announcement. It's going to be going on Twitter, like as of the end of this Twitter Spaces, together with a blog which will explain all of the functionality of the sale, the dynamics of the sale, the mechanics of the sale. But yeah, what John said basically is true. You're going to be able to mint one of these NFTs for $99. It's only going to be live for 99 minutes every day, and this is representative of the fact that this is addressing the wish and also the intention to include the 99% in the ownership of Commonwealth. The community should own Commonwealth, and this is a great way for us to dilute the ownership of Commonwealth throughout the community. So for 99 minutes every day for 9 days, starting on the 22nd of May, you'll be able to mint these NFTs. Whatever isn't minted on that day gets taken out of the supply. So it gets taken out of the equation, and the supply for the NFT Series 2 drops. So that's the mechanism. Have fun sort of with that, and we hope that you get a chance to mint. For 5 people who have been here today, you will get a free mint. So you'll get a DM after this. Congratulations to you guys. And yeah, we will also be announcing a lot more opportunities to get whitelists and also for free mints as well in the next couple of weeks. Is there any last burning questions before we call an end to the Twitter Spaces? I think it's been fantastic, but I'd love to hear from more of the community if anybody has any questions. There was a request to speak. I think it's gone now though. Or is it Napoleon? Did you speak, Napoleon Assets?
I was just like wondering if you could give like a conservative guess based on your experience in terms of revenue share. You know, I make like my own calculations. I think like 1,000 people maybe invest $1,000 each, and these like the normal X is like 10x. So my conservative guess is like 10 million. But maybe you have like different insights into this topic.
No, it's a good question. I'm probably not going to satisfy your question very well, if I'm honest, unless anybody else in the sort of the speaker group wants to hazard a guess. There's too many variables for us to be able to put any kind of estimate on that. It's a bit like asking a traditional VC, if I give you $100,000, how much money are you going to give me back in 7 years? There's no way. I mean, it's so much dependent on the success of the actual funds themselves, because obviously that is what drives the profit share of the protocol, which will then be distributed back to the owners of the protocol and the NFT holders. So it really and if Commonwealth gets to scale at multiple thousands of people and even more using the app, and then using it for co-investing with other people, then there's going to be an exponential increase in that revenue as well. So it's really hard to establish any way to make a guess of that. You could probably look at conservative ranges. But I wouldn't want to do that on the fly here in this Twitter Spaces myself personally. Is there anybody else who wants to hazard a guess at that?
Sorry, is Napoleon asking if he puts $1,000 into one of the funds, what kind of returns he could expect? Is that the question?
No, he's asking
No,
for the revenue share. So the bit that's kicked out to either the owners of the protocol, because let's not forget, I think one thing is important to clarify here as well. Whilst 15% of the profit share is given back to the community who own the Series 1 and Series 2 Genesis NFTs, the other 85% is still for the value of the wealth holders, either directly through the treasury or through the community fund. And the community fund is a big piece of the puzzle here. So a lot of that revenue will go to the community fund, which will then be able to be invested and by the community completely at their discretion on whatever projects they find exciting and interesting. And if that does really well, then you all share in the upside of that as well. So there's a lot of different ways this revenue or profit, we should say rather, that is generated by the protocol will be distributed. And also then it can increase itself through the community fund. So there's many features. Just a really difficult one to model in terms of numbers. I'm sure somebody will try to do it somewhere. But in terms of us as kind of the people creating this platform or helping co-create this platform, it's difficult to put numbers on it right now, I would say.
Okay, I got you. Maybe I got another question. Sorry. Like when you launch your first fund, and there's like numbers that like only 1 in 5 funds succeeds well. So I see a risk there that you launch the first fund and it doesn't perform well. What strategy do you have for the first fund, for example, to be a success, or you launch multiple funds at kickoff, or what's your strategy?
I don't know. Is there anybody, John or Tony, do you want to come in on this?
Yeah, sure.
I can also speak to it.
Yeah. Go ahead, John, please.
Yeah, the one comment that I've got there, I mean, if you look at a project, for example, like Sui that launched yesterday, it launched at like a $6.5 billion FDV. The whole purpose of
pretty insane.
The whole purpose of this project is giving access to retail investors, giving them the same access that VCs are getting. So no one can guarantee that any fund is going to do well, but we're giving everyone a much better shot. If someone's buying start Atlas at a 100 million valuation because they were lucky enough to get in at a VC round, opposed to retail guys that are buying in at a $5 billion valuation. No one can guarantee you that that fund is going to do well, but you're definitely going to have a much better chance of doing well investing at a seed or pre-seed round, instead of investing 3 or 4 rounds later when the public gets access.
Okay, I got you right. Like, because my knowledge is like every VC basically is guaranteed upside. I don't know. Am I wrong in this? Because I thought like the VCs, they invest at the absolute base level and it can't go lower. That's what,
No,
what I mean?
you're incorrect. Not every VC is guaranteed success. I mean, some of these projects you're funding at a very early stage at a seed round, and the founders might run out of money, or something might go wrong with the project and the project might never even launch. So you're not guaranteed success, but you're definitely given a much higher probability of being successful than guys that are investing on the open market.
If I might come in there, John, I think that I'd make a distinction that if there is upside to the project, the VCs are guaranteed. They get paid first, and they get paid a 20% or 30% premium. In addition, even when the fund or project does badly, VCs still collect their 2 or 3% management fee every year for the duration of the fund, which in many cases is 12 to 15 years. So they effectively, their downside is protected, but their upside is guaranteed if, as John pointed out, there is upside. Projects fail and some funds don't do so well in some iterations as others. So that's why each of our funds will be backed by a solid investment thesis that's been proposed by the council and agreed with the community. So it's all going to be very transparent and upfront, and it will always be up to the community to decide on the parameters for these funds as well. The protocol runs the entire process, so it's up to us to figure out, kind of where those parameters are and, how we want them to perform against the investment thesis.
Yeah, going back to one of the points that Tony made earlier, that a lot of VCs, invest emotionally. I completely agree there. They look who's investing and they see that, really strong VCs are investing around them. And, if you look at FTX, for example, if you look how the group of people that invested into that project and they missed so many things that were actually blatantly obvious. A lot of that was down to investing with emotion and not wanting to miss out. So I think, especially with Commonwealth, when a council member brings a project for everyone to see, the due diligence is going to be a lot more intense than just one VC doing their DD. I think it's going to be a lot harder to miss things with so many different eyeballs doing DD in different ways.
Okay, thank you very much. I got one very last question. When the app is developed and the smart contracts are developed, everything is developed, is there still the opportunity to improve web design, or the app to give updates, maybe there are technical developments?
Oh, 100%. It's living, breathing technology. It's there to serve the community. I think as we unveil some of the plans we have for where we can extend the protocol and the kind of fund engine that we're building in the future, I think that will be exciting for the community to input on as well. And in addition, I think the platform, I think about the what we're building is on 2 levels. It's the protocol and then it's the platform. And the platform are kind of very local manifestations or interfaces into the protocol. So that can take the shape of kind of anything we want. And I think, we have to be open all the time to evolving it in line with the needs of the community and where we want to go. And in addition, right, we also know we're going to be learning as we go. We're trying to find that product market fit and trying to find that, uneasy balance at the moment between Web 2 and Web 3. So all of our smart contracts currently are upgradable based on OpenC kind of audited standards, right? But they're left upgradable because we know we're going to need to make changes at a fairly fundamental level up until the time we're satisfied that now meet the requirements, and at which point then we make them open source and we kind of burn the keys and make them so they are immutable. So we're very much building with that evolving understanding of what Commonwealth will need. So I hope that answers your question and reassures you about how open we're planning on being with this.
Yeah, thank you. One more question. Very sorry. You look right now. I have my Genesis in cold storage, and I'm very happy with that. Of course, but of course, I'm interested in staking them. You know, for the extra BLTH allocation. But I am wondering, because the smart contracts are very new, and I'm a bit afraid because of that. Is there like, if there's like a hack, worst case scenario, is there like a screenshot, a snapshot or something to secure that everyone gets a valid Genesis back, you know, so that the Genesis aren't lost in a hack?
I don't really understand your question, but no, there's no guarantee.
I mean, my question is, if we stake them, they are like, I guess the Genesis NFTs are like in the staking contract, then in the smart contract, and maybe there's like a bad actor hacking the smart contract.
I see.
And
yeah. I'll have to have a think about that and discuss it with the team. But what verification or we could put in place, and what verification's available out of the box. But yeah, they'd be kind of secured on the chain. I'd have to dig into it a bit further and see if I can provide you with any more clarity on that one. So let me get back to you on that in the next few days, okay?
Yeah, I trust in the process. You don't have to get back to me. I just think it's like security is always in crypto is always top priority.
100%.
Having
Napoleon, I'm gonna have to kick you off the stage, or we might be here till tomorrow. But you asked some very good questions, so thanks for that, buddy. Timmy, just I've got a question for you. You know, there's obviously some guys here that have joined the spaces. They might have just come across it when they were scrolling down on Twitter. Maybe you can just run the guys through what a Genesis 1 NFT gets you. You know, obviously it's attached with a large amount of tokens, and you get a piece of the protocol for life. Maybe you can just give us 5 minutes on that.
Yeah, sure. Sounds good. So I think it's really valuable for everyone to know that in line with what Commonwealth is all about, we as a project have not gone out and sought private funding from our network of VC investors. We could have, I think, quite easily gone out and said, we're building something that's fantastic, put together a pitch deck and secure quite a bit of funding to be able to go to market in a much more conventional, traditional method format. However, Commonwealth is about equal opportunity, and our belief and conviction was that everybody in the community should get the first opportunity to invest or to become part of Commonwealth. So we wanted the community to take ownership and be entitled to get Commonwealth tokens before anyone else, essentially. So the way we've done that is through the Genesis Series 1 and Series 2 NFTs. The Genesis Series 1 NFT, which are all minted out right now, there was 2,000 of them that have been fully minted. It was around the 2nd of April, I believe, that they were finally fully minted out. They are giving the holders the right to 44,000 wealth tokens and a 12%, a share in 12% of the protocol profits in perpetuity, so forever, essentially. If Commonwealth is a behemoth, then if you are a Genesis NFT 1 holder, you will be getting your share of 12% of the protocol profits forever. So that's some of the main utilities. There is also a lot of other utilities in terms of token gated opportunities that we will provide down the line, and these are, stay tuned for those. If you're a Series 1 holder, you will get quite a few opportunities down the line. Now for the Series 2 NFTs, the amount of wealth tokens that will be attributed to those depends totally on how many are minted. John already mentioned that there's going to be a maximum supply of 8,991 of these NFTs, but every day out of the 999 per day that are that can be minted, whatever isn't minted that day gets removed from that total, from that supply of 8,991. So who knows in the end of the 9 days where we end up in terms of the total supply of the Genesis NFT Series 2. However, 2.2% of the supply, so that's 22 million tokens, will be divided amongst the Series 2 holders. Okay, there is an upper limit on how many tokens we will put to a Series 2 NFT in the unlikely scenario that only 10 out of the 8,991 get minted. It is not the case that then 22 million tokens get divided by 10 and everyone walks away with 2.2 million tokens per NFT. No, that's going to really upset the apple cart. We don't think that's a real scenario, but just in case there has been a sort of an artificial limit put on how many tokens a Series 2 NFT can have. All of those details are in the blog, so if you want to go through that again, please go and read the blog. And there's also going to be token-gated benefits for Series 2 holders. After this, there'll be no more Genesis NFT holders, and that'll be it. And then we turn our attention to TGE and community sale. Sorry, I'll stop there. It's probably a bit longer than you hoped for, John, but yeah, that was my explanation.
No, cool. That was great. And then just one question for Tony. When it comes to the staking, I know that a lot of people, have been DMing me about the staking when it's going to be available. I know you mentioned earlier that it could be as early as sometime next week. Is that staking going to be available for lifetime, or is it just up until the TGE of the token?
It's only up until the TGE, and it's on track to go. I hazard a guess it will be midweek next week, but mid to end of next week it will be live.
Cool, brilliant. Okay, fantastic, guys. Yeah, it's been a great spaces, and I look forward to the next one. If anyone's got any questions, feel free to join our Telegram group. It's quite active, and the mods there are really good. And yeah, I look forward to seeing you guys all soon.
Yeah, thanks everyone.
Thanks, everyone.